What's up, guys? Welcome back to the Momentum Trading Lab. And in today's video, I'm going to teach you a simple SMC trading strategy that I personally use to get some of my funded accounts. And if you follow every single rule as outlined in this video, you could do the same. So with that being said, let's get into it. Okay, this is the rules for this trading strategy. So first off, this is the preparation. So any positions will only be taken during the actual trading session. So if you are trading index futures, for instance, NQ or ES, you'll only be looking for the setup to form during the London or New York session. We'll only be using the 15-minute time frame. This will reduce a lot of the noise that you notice in the chart. And then next up, just before the actual trading session starts, we want to identify different liquidity pools. So we'll look at untouched swing highs and swing lows, and we'll mark off those levels. So that will identify the different sell side and buy side liquidity pools. And then once we have done all of those things, we'll wait for price action to take out a liquidity pool. So if we use this example, price action trades into the buy side liquidity into an old high. Next up, we look for displacement in the opposite direction that creates a fair value gap. And this fair value gap must be confirmed on the 15-minute time frame. So if we look at this graphic, we displace in the opposite direction. We confirm a 15-minute fair value gap. And then next up, we need to see a bearish market structure shift for this example. So once you see the displacement leg, you want to confirm that it took out the previous higher low. So that will tell us that we are shifting into a bearish market structure. And then you want to take your Fibonacci tool. And for a bearish impulse like we have here, you want to pull your Fibonacci from the high to the low. If this was a bullish impulse, then you'll pull your Fibonacci from the low to the high. And then once this has happened, we'll wait for price action to retrace into the 62% retracement level on our Fibonacci. We can enter right there with our stop loss at the high. And for our TPs, we'll look at the negative 27% extension level and the negative 62% extension levels. So you can take off half of your position right there, put your stop loss to entry, and then close the entire position at the negative 62% extension level. Okay, before we go into some backtesting, let's have a look at how to set up your Fib retracement tool. So these are the levels that I use. The 0 and the 1, which is your anchor points on the Fib. So it's the high and the low. And then next up is the 62% retracement level, which you just fill in 0.62. And then the 79% retracement level, which is 0.79. And then I also have the 65% retracement level. So the area between the 65 and the 62% retracement level is known as the Fibonacci golden pocket. And then for our take profits, we'll be using the negative 0.27 and the negative 0.618. So these are my Fib settings. You can configure it according to this. So we'll be entering off the 62% retracement level, and we'll take profit at the negative 27 and the negative 618. Okay, let's do some back testing for this strategy. So right here, we are just before the 9:30 open for the New York session. So now we have to mark off the different untouched liquidity pools using the 15-minute time frame. So I like using a trend line for this. So here we have a swing high. So above the swing high, we have buy side liquidity. So you want to monitor that level. And then right here, we have some relative equal lows. So below these lows will be sell side liquidity. Okay, now that we have our different liquidity pools marked off, now we just need to wait for the session to open and for price action to take one of these levels and then displace in the opposite direction. Okay, the market opens right there, trades into the buy side liquidity almost immediately. So let's see if we get that displacement in the opposite direction. Okay, it digs into the buy side liquidity more. Again, starts to displace. So here we have a higher low. So if we displace below this level, this will give us the bearish market structure shift. And we are also looking for that fair value gap to confirm on the 15-minute time frame. Okay, so right there, we confirm the 15-minute fair value gap. And now what we need to do is we need to get our Fibonacci tool, and using the candle bodies, we pull it from the high to the low. So the high will be right there, the low right there. And now we are waiting for price action to trade into the 62% retracement level. We will enter right there with our stop at the high, and we'll target these extension levels for our TP. Okay, so as you can see, we went down a little more. That's fine. Just keep on tracking price action with your Fibonacci tool. Okay, so as you can see, it went down more. That's fine. Just keep on tracking it with your Fib tool. Right there, we traded into the 62% retracement level. So that's where you enter. Stop at the high. The ultimate TP will be at the negative 62 extension level. Move this to the side a little bit. So at the 27% extension level, I will take off half of my position and bring my stop loss to my entry just to secure those gains. And then I will close out the entire position at this extension level, which is the negative 0.62. So let's see how this plays out. Right there, it hits our first TP and hits our second TP. And that would have been in total 164 points on the NASDAQ. Okay, this will be our second example. So right before the 9:30 opening for the New York session, we need to mark off the different liquidity pools. And like I mentioned before, below old lows is sell side liquidity. And above old highs, we have buy side liquidity. Okay, so now that we have our different liquidity pools marked off, now we just need to wait for the session to open and for price action to trade into one of these levels and then start to displace in the opposite direction. Okay, so right at the open, start to drop aggressively, but we don't do anything yet. It's not went into one of our levels yet. So we continue, we wait. Okay, so right here, we start to dig into the sell side liquidity. So now we wait. Will we continue lower? Then we will look at a lower liquidity pool. But if we start to displace to the upside, then we look for that bullish market structure shift and the fair value gap to confirm. Okay, so before we continue, right there, we printed a high. So technically this is a high. If we look at this candle and it's high, on either side of the candle, it's got lower highs. So this confirms this as a high. So if we displace above this high, that will be a bullish market structure shift. So let's see how this plays out. Okay, so we started to displace above that high, created a fair value gap. So now the next step is to use our Fibonacci, anchor it to the lowest candle body and the highest candle body for bullish impulses. And now we wait for price action to retrace to that 62% retracement level. Okay, so as we continue higher, we can just track price action with our Fib tool. So right there, we would have been tripped in. Stop loss at the low. First TP at the negative 27 and the last TP at the negative 62. Let's see if this hits our stop or goes to the TPs. Move the long tool to the side a little bit. Okay, and then eventually it went to TP1, which was the negative 27. Let's see if it goes to the next TP as well. And there we go to the next TP and also into the buy side liquidity pool. Okay, this is our next example. So right before the 9:30 opening, we need to look to the left to see different liquidity pools. And this is an interesting one. So right now we have price action right before the open in a bearish fair value gap. Has not closed above it yet. And then we had these relative equal highs right there. So it's already in a liquidity pool. So relative equal highs right there. So now at the open, you could kind of expect a little, maybe a little push to the upside or a straight dump to give us the bearish market structure shift, which will be displacement below this low, which is the very last higher low. So let's see how this one plays out. Okay, so immediately at the open, it starts to displace to the downside. It gave us the confirmed 15-minute fair value gap. So it started to displace from a liquidity pool, which was above these equal highs. And then also as extra confluence, it was in this fair value gap as well. So now we can track the price action with our Fibonacci tool. So from the high to the low, snap it to the candle bodies. And let's see how this plays out. Okay, so right there, it traded into the 62% retracement level. So that would have been your entry right there with your stop above that high right there. TP1 will be at the negative 27 extension and the second one at the negative 62 extension. So let's see if this goes to our stop or to the TPs. And as you can see, it went straight to TP1 and TP2. Okay, so this video is coming to an end. That has been the trading strategy that I used to get some of my funded accounts. If you want to get funded, Bulenox currently has a 90% sale on all option one evaluation accounts. You can get more details in the description below. And if this video provided you with any value, please consider hitting that like and subscribe. And I'll see you guys in the next one.